I agree entirely on everything you said. I think gold is ultimately how they get out of this. Um, there are provisions in the Federal Reserve Bank operating manual by which um, the Treasury, United States Treasury Secretary, can instruct the Fed to write up the gold, the US's gold, and the accounting treatment of that is a deposit, free and clear, no debt attached to it, into the U.S. Treasury general account. So at 261 million ounces or 8,000 tons, every $4,000 per ounce the Treasury were to instruct the Fed to write up the gold would deposit roughly $1 trillion, 4,000 times 261 million ounces, into the TGA. So like, if you said, Luke, your Treasury Secretary, how can you get out of this? We need to get our debt to GDP down right away. How do we get out of this debt spiral? I call up the Fed. Powell, it's over. You've lost the long end no matter what you do. Write up the gold to, I don't know, it's a $24 trillion Treasury market. Prices are probably down, what? Mark base value 30% on average over the last 2-3 years. So the real market value of the U.S. Treasury market, I don't know, 12 trillion, it's 15 trillion for round math. I'm going to write up the gold by 10 trillion, right? So it's $40,000 per, just actually do 5 trillion. Just take a third of the debt out. I'm going to write up the gold by 5 trillion. If I write up the gold by 5 trillion, every trillion is $4,000. So it's $20,000. And I get 5 trillion deposited into TGA, free and clear. I go out into the market and I buy back a third of the U.S. debt outstanding. Now it's a $10 trillion market value market against GDP of 27 trillion, give or take. Voila. We've gone from 120 to 40% in one stroke. Thank you for your donation, Treasury holders. Now, inflation rips, the dollar probably sells off quite a bit, but that's all in the cake.